to the What Bitcoin Did podcast.
Hi there from Chicago. How are you all? Welcome to the What Bitcoin Did podcast, which is brought to you by Kraken. I'm your host, Peter McCormack, and today I've got an interview with Brad Stevens and Spencer Bogart from Blockchain Capital. But before that, I've got a message from my show sponsors. So BlockFi, my oldest sponsor, the ones who have been with me since August last year, who have renewed now 4 times, renewed for another year. An amazing company I've got an amazing relationship with. I know many of you listeners know them now. Some of you maybe haven't checked them out, but they are the future of Bitcoin and financial services, and they've got 2 amazing products in the market, one of which I'm using, which is their interest accounts, but they do also offer crypto-backed loans. With their interest accounts, they announced they're going to be supporting the Gemini stablecoin, and at launch, you can be eligible for up to 6.2% APY, which is paid monthly, with a minimum balance of 2,500 GUSD, and balances above 100,000 GUSD will earn a tiered rate of 1.5%. BlockFi, an amazing company. You should definitely go and check them out. They're at blockfi.com, which is BLOCKFI.com. That's blockfi.com, which is BLOCKFI.com. Next up is Kraken. Without doubt, the best exchange in the world. Are you using them? Have you checked them out? Have you checked them out recently? Lots of cool things happening. They've been making investments both in companies, but also they're investing in the product. They've got some amazing things coming later in the year. They are also the only regulated spot and futures crypto exchange, and they are the only place I now use for buying and selling Bitcoin. But they don't just have the exchange. They've also got Kraken Security Labs, where they look to improve security across the entire industry. They've got the Kraken OTC desk for large trades with private and personalized services. They've got Crypto Watch, where you can trade on multiple crypto exchanges from a single platform. And they also offer margin trading, futures, and indices. Whatever your trading needs, Kraken's got you covered. So join me in supporting Kraken at kraken.com, which is KRAKEN.com. That's kraken.com, which is KRAKEN.com. Okay, so last week when I was in San Francisco for Bitcoin 2019, I got the opportunity to sit down with Spencer Bogart and Brad Stevens from Blockchain Capital. These guys have been paving the way for investing in cryptocurrency since 2013. And look, firstly, just want to say a big thanks to both of them, not only for the time with the interview, but various support they've offered me since I got to know them, and also for allowing me to attend their really cool lightning event that they had in the office after the interview. Very cool, lots of cool people there doing lots of cool things, and also an amazing selection of meat and cheese. So thank you for that. They are some of the OG Bitcoin investors, and they are fully committed to supporting the space and solely invest in blockchain businesses, except they've did 1 or 2 by accident, but you'll hear about that in the interview. But it was great to hear how, as investors, they are looking at the space and where they see value in the market, and also what they think about other projects. We had this cool moment with Facebook's Libra where Brad explained to me how he thought it was a win-win for Bitcoin, which was something I hadn't really thought about. We also got into how the fund was started by Brad and his brother Bart, how Spencer came to work there. We talk about Lightning Network, Bitcoin versus other cryptocurrencies, how they are mining Ethereum at $2, and how they search for the next unicorn. So listen, it's a great interview. I hope you enjoy it as much as I did. You know you can always reach out to me if you've got any questions about it. My email address is hello@whatbitcoindid.com. And yeah, this trip is nearly over. I've been traveling around the States for the last couple of weeks, and it's been amazing. I'm in Chicago now for an interview, but tomorrow I head back to Boston and then home. I just want to say a big thanks to everyone who I've met, those who have shown me hospitality in their towns, and for all the people who've made themselves available for interviews. The show does what it does because of the people who do the interviews and those who support it. So a massive thanks. And also my new podcast, Defiance, is coming together. Hopefully going to be launching in the next month, which would be super cool. So keep an eye out for that. But anyway, if you've got any questions, reach out to me. My email address is hello@whatbitcoindid.com. Welcome to the podcast. Thank you for coming on. Finally.
Thanks for having us.
Yeah, excited to be here.
How are you both?
Doing well. Fired up.
Yeah,
Business is good?
business is great.
All right. Well, I want to find out a bit more about venture capital with you guys today. It would be great as a starting point for you both to tell me your backgrounds so I understand a bit more about how you came into venture, but also tell me about how you started the fund as well.
Sure, I can start on this. It's Brad. My brother and I ran a hedge fund from 2002 to 2012 that was basically venture capital in the public markets, where we looked at kind of out of favor public companies that fallen, maybe they broke their IPO price, maybe they had a change in CEO, something like that. would go in and buy 9.9% of them and treat it much like a venture investment. So get involved and kind of really help these companies get back on their feet and get back into an exciting position again. So we did venture capital-like investing for about a decade. And then 2012, post-financial crisis, didn't really want to be in the hedge fund industry anymore, and got very into Bitcoin in about 2012 through a private company that we're invested in that was going to acquire Mt. Gox. So I had to figure out what Mt. Gox was and figure out what Bitcoin is. And in that time, both my brother and I got rapidly excited about Bitcoin and started mining. And then we needed startup companies to help fill in the holes of the ecosystem, basic infrastructure. Wallets, exchanges, crypto credit cards was a big thing we were into in 2013, even though they all went, none of them quite made it. So that started us down this path of investing in crypto startups in the ecosystem and eventually turned it into Fund 1. And that was basically an exchange fund, which is take 40 CEOs and have them give you either cash or $50,000 of their equity and pool it all together. So all 40 CEOs got to have access or, I guess, investment interest in lots of other companies out there, not just their own. So it's the kind of the fear that we played into, which is you're very early and you're a pioneer in a big sector. So you got the kind of the big idea call right, but it's a travesty when all of a sudden your company doesn't work, but all the other ones around you did. So at least have exposure to everything else as a kind of a hedge on maybe your startup doesn't work, but you at least directionally are correct with all the others.
Okay.
So that was Fund 1.
Never heard of that as a structure.
It was good for us, mostly in like a networking point of view. Because now we had the ear of, I think it was like 35 CEOs that actually like took our phone call because we were investing their money. And then we were invested back in them too. So it really put us at the center of the venture ecosystem back then because it was pretty small.
Okay. Spencer, your background?
Yeah, sure. So I think my first professional experience in financial markets was post-financial crisis, working at a fund of hedge funds. So that's a fund that invests in other hedge funds. So really the exciting thing about that was just reading the research that was coming out. A lot of these hedge funds, especially a lot of which were very macroeconomy focused. And I thought, wow, this is really interesting work. I can't believe people get paid to do this. How do I do a job like that? And so, one step towards doing that was I started earning my CFA credentials, my CFA charter. After working at the fund of hedge funds, I worked at a company called ETF.com, where we've built a first of its kind ETF analytics platform, really for people to go on and learn about any kind of ETF that was out there, what kind of liquidity, how its exposure looks, et cetera. So that was fun, startup experience. And then from there, I went over to Needham & Company, which is a mid-sized investment bank, and worked on the equity research team. So that meant that I covered a suite of maybe a dozen companies in the space. So like the Salesforce.coms, LinkedIn, et cetera. And, you cover their quarterly earnings, you track what's going on with the company, and write public-facing research for what's called the buy side. So investment funds that are investing in those companies to digest and understand, should they acquire a position, should they lighten up on a position, et cetera. And in theory, all of those kind of SaaS, so my sector was SaaS and internet, so software as a service and internet. And in theory, these are, the most disruptive companies in the world. But the problem was on the side, everything I was doing was kind of blockchain related. And so everything going on in the Bitcoin ecosystem seemed far more interesting than what was going on a quarterly basis on Salesforce's earnings calls, which are interesting in of themselves, but it just doesn't compare to the kind of disruption that you're seeing within Bitcoin. So in early 2015, it kind of came time where I felt like there was not enough coverage of blockchain technology writ large, and so I wrote Wall Street's first industry report kind of covering blockchain technology, basically just outlining kind of like what is it, who are the major players here, who are some of the investors in the space. And that was kind of where I started to get to know Blockchain Capital and Bart and Brad. Mm-hmm. And I segued that research into covering kind of very actively Bitcoin, which was fun to cover in 2016, writing public-facing research on Bitcoin. Because as soon as you hit publish, you get a lot of angry phone calls, people telling you of like, you must have gone crazy here. And then by the time it got towards the end of 2016, I realized that there was so much going on in crypto that I couldn't do well in it without dedicating myself fully to it. Okay. So at that point, I was probably spending 80% of my time at Needham on crypto-related things, but said it has to be 100%, otherwise I'm going to fall behind. And so over the course of that, I'd been working with Bart and Brad just off and on, especially as people that were investing in the industry and at the center of it, to make sure that the things I was writing about made sense. And so when it came time, I let them know that I was going to go and do something in the space, and they said, ended up being a great home here at Blockchain Capital.
Okay, great. So going back to 2013, where did your conviction come from with Bitcoin? Because obviously it was quite new. It had quite a significant bull run back in that year, but it wasn't established. There wasn't any regulatory framework. Kind of a big risk to go into that. Where did the conviction, and did you both have the same conviction?
Yeah, so once we had the kind of the option or the look at Mt. Gox and went and did a lot of the basic research. Actually, one of the kind of seminal pieces that I read was Ribbit Capital had written a few-page investor letter talking about the case for Bitcoin. And it really kind of opened our eyes to, our family has a mining background. Our father's been investing in mining companies for 30, 40 years. So to understand digital gold versus gold, that was kind of our first major understanding that this is a store of value that can't be confiscated, can't be, won't have crazy hyperinflation. Go back to Jimmy Song's kind of focus on sound money. That was really kind of our first major look at it, that this is a global store of wealth that anyone could access. It shifted to means of exchange and thinking this was going to be the payment rails, maybe kind of a la Roger Ver's view of the ecosystem. But none of that worked. That just, none of the companies took off. As I said earlier, none of those credit card companies took off. It just really didn't thrive as a payment mechanism. But it did thrive, or has continued to, in that sort of global store of value concept. And that's what really hooked us first.
Okay. So you've been running the fund now for, 6 years?
Yeah, 6
years. Yeah, 6 years. So there's been a lot of change. So before we get into some of that...
It had some quiet years, I'll say that.
It's crazy.
I mean, there was times in maybe it was 2014 where I think Bitcoin would be mentioned in the press maybe twice in a given year, or maybe an article written about it in some obscure magazine, and it would be literally jumping up and down and cheering. And first time it was ever mentioned on a CNBC or a news show, we're like, woohoo! More people now know about it times 100 than ever did before. So, I think in the early days, you're much more like an evangelist, just trying to get the word out there to mostly the larger financial system.
Yeah, I was out at the Oslo Freedom Forum with Alex Gladstein, and I did a panel called Bitcoin Around the World with people from Iran, India, China, a couple of other countries. But before I started, I asked the whole room just to put your hand up if you hadn't heard of Bitcoin. No hands went up. It wasn't a Bitcoin conference, but it was the kind of people who would know about it. But it was still impressive that every single person left their hand down. And when I asked if you own Bitcoin, half the room put their hand up. So we're in a very different place. And also, this was something Brian Quinten said to me the other day. He said, Bitcoin now doesn't have a branding problem. It's out there. I think that's been absolutely great. So one of the places I like to start with you is because I've been on your website. I've been through your investments. But I also just read a recent article that you wrote on Medium about almost the history of where we've been. That article reads very much to me like we've taken an interest and we've looked at other different protocols and projects, but we really identify the opportunity in Bitcoin as a vertical opportunity. But you have invested in token-based projects. So where are you in terms of Bitcoin versus blockchain right now as a fund?
Yeah, sure. So, we certainly appreciate everything that Bitcoin has accomplished so far and actively look for investments in that ecosystem and very much see it as kind of a 0 to 1 type moment for the ecosystem. And while there's plenty of innovation and new consensus protocols going on all across the ecosystem, so far we haven't found that any of them have been sufficient differentiators to overcome Bitcoin's first mover and network effects. It's great that they've made small improvements, but I think so far, again, they really haven't proven meaningful enough to overtake Bitcoin. Now, granted, again, as much as I think that's the case and as much as I think that we're going to see development really start to coalesce around one or at most a couple winning protocols, it's still relatively early in this ecosystem. So, responsibility for us to our LPs is to keep an open mind to everything that's out there and making sure that we are taking a good look at something that could be either a Bitcoin competitor or something that is a new upstart that might serve a totally different use case. So we pay attention to all of these things, but again, really see Bitcoin as the 0 to 1 moment.
Okay, wow. So where's your kind of views on, say, Ethereum now, which has obviously been the leading smart contract platform?
It's changed over time. I think in early February 2016, We made, I think, the venture ecosystem's first venture investment into anything ETH-related, which was into Parity, mostly because of our relationship to Gavin Wood and kind of understanding what he was doing there. Subsequently, right after that, we built a massive Ethereum mine up in Washington and mined Ethereum from like $2 to probably $9 pretty heavily, and then eventually sold the mine, wrote ETH up, swapped into Bitcoin, and now I've kept it in Bitcoin. So like
well played.
It was nice. We should have held Ethereum a little longer, obviously. But
that's hindsight.
I'm not complaining here. It's a major win for fun too. So we've invested in Ethereum, and we've invested in a handful of other token projects. We invested in Block One, which obviously did EOS, and we're able to exit that recently at a 66x return in less than 2 years. So that was I'm happy with that. But we're still more on a wait and see on a lot of these other chains. A lot of them have amazing technology, amazing developments, amazing PhDs behind them, and just geniuses. But we're not seeing a lot of usage or adoption. We talk about this internally in kind of a joking manner, but it's like those, ghost cities in China where you have, these huge cities built in the middle of nowhere where people are hoping to bring all the peasants out in from the fields into kind of the modern city workspace. And they have perfect monorails, and they have the amazing water system. They have all the functionality of like a high-tech city, but they're ghost cities. No one's there. And that's what's really happening with a lot of these chains. They might have better, TPS, and they might have all these nice bells and whistles that make them superior in some sense, but no one's using them yet. So what we're really trying to do with the front row seat here is not just go blindly speculate on what's going to be the extra feature out there, but really follow adoption, follow the users, see what traction occurs. I mean, we might miss some of these seed round deals and come in more in the A round once we see some more traction. But a lot of these seed round deals for these next generation chains were $1 billion or $2 billion valuation, which that's not the valuation you pay when you're trying to get 100x or 200x on taking an early, risky seed stage bet. So we're watching closely.
So I guess 2017 was kind of a unique year. Is it very unusual to be able to deliver, say, a 66x return, that kind of return on something that hasn't even achieved a product market fit? Is it unique to crypto, or does that happen in other markets?
It does, usually not in 2 years. I mean, there's a few notable exemptions out there, like Instagram or something, or some of these kind of large billion-dollar exits that have occurred in a very short amount of time before they really got massive traction. But no, usually it's, a slow build. There's a Series A, show some milestones, Series B, show some milestones, and you kind of eventually build there in a structured, metered way. You just usually don't give, 3 20-year-olds $1 billion and say, go build a multi-billion-dollar company. I mean, do you think you're crazy if you said that to anyone pre-crypto?
I think you could argue that Instagram had achieved some level of traction. Yeah. People were using it.
It was just the speed to it. It was pretty fast.
Yeah. I always think about those guys, though. At the time, $1 billion must have seemed like a great exit, and now, I mean, the WhatsApp deal...
Trivial to what's happening here on a day-to-day basis.
The WhatsApp deal, what was it, 2 years later, was 19 billion? And but you never know, right, when to sell. Okay, so it sounds like you're it's not that you're anyway going to be Bitcoin maximalist, because that wouldn't be particularly smart as an investor. But you are probably what Lily Lu said to me, more like a Bitcoin rationalist.
Yeah, and it has proven market fit. It serves a distinct purpose that works, and I think there's going to be many, many more forms of utility that grow off of Bitcoin. But for the time being, it's the only chain out there that has a functioning utility that does exactly what it needs to do, and people are using it.
And it does that without having to make any crazy changes, right? So like most of the things, they have something that's really interesting that they're working towards, but they have some pretty significant tech hurdles to overcome. I mean, overall, when we think about the space, like anything public blockchain related, you have to think about everything in terms of trade-offs, right? So you can optimize for speed, and that comes at a cost. You can optimize for privacy, that comes at a cost. And so you have to think about all these blockchains of okay, so they've optimized for one particular feature, but what did they give up in return? And is optimizing for that feature enough to, again, overcome Bitcoin's first mover advantage and its network effect? And so, I mean, pretty early on in that experiment, we saw Litecoin launch, saying, okay, maybe speed's going to be a sufficient differentiator. Well, I think we've seen enough evidence to note that's not going to be the case now, despite the number of people launching new blockchains that, taunt how many TPS that they can do, transactions per second. We've seen chains launched with superior privacy, with Monero and Zcash. And so far, those are great experiments. Really glad for the people that are working for them. But so far, it hasn't been enough to overcome Bitcoin's network effect. And then the interesting trade-off is, again, what you mentioned with Ethereum in terms of expressiveness. So this idea that if you make it really easy for people to build anything on top of it, will that be enough of a sufficient differentiator to overcome Bitcoin's network effect? So far, it hasn't been. Is it too early? Maybe. We'll see.
I got into an interesting discussion on Twitter yesterday with somebody. So Vitalik tweeted out, what are the 3 best apps on Ethereum that most represent what Ethereum is to them? Something along those lines. And I replied back, 1, Ethereum Classic, 2, 3, It's kind of a little bit of a troll. And then somebody had come back to me and said, what are the 3 best apps on Bitcoin? And I said, doesn't really need any.
That's the difference.
Even with Lightning being early, I get all the utility I need from the Bitcoin-based chain. I use it occasionally, 2 or 3 times a month. I'm sending or receiving money. Do I mind have to wait an hour or 2? No, it doesn't bother me. It's secure. I trust it. The price is pretty stable. I mean, it can go up and down, but it's not as crazy as other markets. And that's one of the things I've started to realize with Bitcoin. It's great as it is already.
And there's a lot of value that, I mean, again, it's the bird in the hand worth, in this case, maybe 10 in the bush, right? Like it already meets its use case very well. Everything else needs to kind of evolve into it.
Do you ever start to think that maybe, I met with Jimmy Song, he was with me in Oslo, and then we recorded a show about blockchains and the myth of the blockchain. And he's very much in the field that blockchain is a very specific use, and it's pretty much only works for Bitcoin. Do you empathize with that view? Or are you more open-minded?
Jimmy's further on the Bitcoin maximalist spectrum, obviously.
Yeah.
And we love him, and he's such a great asset to the ecosystem and to blockchain capital. But I think we need to have a broader worldview of where this ecosystem is going to go. Mm-hmm. And if it's corporate coin or one of 20 other different types of Ethereum 2.0, 3.0, go on and on, that might find unique market fits. Certain ones, maybe the EOS or the Trons of the world might take off in gambling or video games or whatnot. That there's lots of applications and uses out there for the different chains. We're just still, Bitcoin has a proven space, and I don't think for that distinct, capped amount, inflation resistant, sound money, Bitcoin's won that by a huge margin, and I guess that race is over.
And I guess you guys, as a fund, you invest in the asset as well as investing in companies.
We do as well.
Yeah, you're interested in both. And would you invest in tokens, or would you prefer to invest for equity?
We haven't done some token rounds. We found in 2017 the valuations were just wild. We did do some through our BCAP, which is our ICO token fund. So that did a fair amount of SAFT investing and token-related investing. Much less of that in our more traditional funds have done less of that as well. And a lot of it's just been a valuation difference. All of a sudden, it's a $200 million SAFT valuation, and then there's some startup with almost the same amount of team and a similar traction. That'll be a $6 million valuation. So equity valuations have been far superior than these token valuations.
Okay, interesting.
Now, you don't get the liquidity, obviously, but we're a venture fund. We have 10 years to find returns with our investments. So we're not a hedge fund that's just trying to jump in and be a trader and trying to make a quick flip. I think so many of these funds out there are really just trading names, not really understanding companies. They might need to understand the technology enough to know it's real, but they have short-term movements and they'll buy here and sell here and think there's some arbitrage between this and that. And that's really not our approach. Ideally, if we do buy into a token, we're going to hold it for 2, 4, 6, 8 years, ideally.
I guess too much liquidity could also be a bad thing.
Oh, no, you always want liquidity.
But it seems to me the problem with too much liquidity with tokens is that the price just gets suppressed.
I think that's I don't think it's necessarily a byproduct of liquidity, right? Like, I mean, if a market is illiquid, then a little bit of selling will cause that, right? But liquidity in itself, like lots of trading volume, not necessarily.
And a lot of them got depressed because they were really garbage products.
Okay.
That shouldn't have raised money at a $500 million valuation.
Okay.
And some of these valuations are crazy. So when you see that, some of these coins being down 90, 95%, they probably came back down to the valuation where we would have paid for them as an equity round.
Right, okay. Fair enough. Okay, so before I start talking about giving advice on how people can raise and learning a bit more about what you look into them, it'd be good to talk about a bit of the market, what's going on. I do have some more Bitcoin questions, but I really want to know what you guys think about Libra.
Yeah, I mean, I think it's a great project. I'm really excited to see them kind of pull the curtains off. I'm just hoping that it can actually get live, particularly with all the regulatory pressure, and then particularly trying to get all of these different members of this association to kind of come to agreement to actually get this thing launched into the market. But I think it's something that, despite much of the public criticism, could actually provide a great deal of utility to a number of different people. And then I guess selfishly, as someone who holds Bitcoin, I see it as a great on-ramp into Bitcoin as well. And certainly not something that's competitive. And again, I think this really highlights the fight from whatever it's 2.5, 3 years ago now of raising the block size or not to be able to facilitate low cost payments around the world. Well, sure enough, always the concern was that someone's going to step in like a Venmo and just offer that, right? And what you have is essentially something like that here. Something that's a little bit more decentralized than just a Venmo, but again, something where by compromising on decentralization, you can facilitate really fast, cheap payments. So, overall, I see it as great. I think it's fantastic that they're bringing so many people into the ecosystem, and presumably brings, this familiar form factor, right? So something that's kind of close to a dollar, kind of close to other currencies. So for people, it doesn't feel as intimidating to kind of step into, and then sets them on kind of a learning curve of like, okay, well, what else is going on out there? If I'm holding this one cryptocurrency, it's no longer taboo anymore, right? And then the other major reason why it's a great catalyst for Bitcoin is just it's lit a fire in the pants of all of these like large financial institutions that are now saying, okay, I've got to build out infrastructure for this. That means I need custody, I need wallets, I need compliance. I need to do all these like kind of big hairy problems that I just didn't really want to have to do to deal with Bitcoin. But now I feel like I'm being forced because of what Facebook is going into. And once I've gone and done that, and I've already built up that infrastructure, hey, you're only one step away from supporting Bitcoin at that point. So overall, I've seen a lot of companies get a lot more serious about the space, and a lot of everyday users start to ask reasonable questions about what's going on in our industry.
And you can also have take this further out a year or two. Politicians come in here, raising alarms, going crazy. Not only does Libra end up as kind of like the punching bag for the politicians for a while, and they have the dollars to do it, the resources, et cetera. But if they do end up getting Libra is stopped and or shut down, we just finally understood why sovereign grade resistance is relevant. So Bitcoin, again, looks like the big winner here. So, it's like heads I win, tails I win. If Libra takes off, we get, hopefully 1 billion new crypto users that'll eventually migrate somewhat into Bitcoin and grow the whole ecosystem. If Libra does get shut down or regulatory problems, boom, now we know why Bitcoin is so powerful as a global reserve currency.
I hadn't even thought that through like that, but you're absolutely right. And also another thing about it is I think the backlash was expected because of Facebook's history of Cambridge Analytica, invasions of privacy, etc. But when you start to rationally think about it, it does kind of make sense. And I personally, I'm a fan of it now. I want it to come. I don't think I'll use it, really. I might send $10 here or there, or 10 Libras or whatever they're here and there. But I actually, and even though people are saying it's not a cryptocurrency, I want them to call it a cryptocurrency. Because I just think it's all roads lead to Bitcoin.
Mm-hmm. It normalizes that term. Cryptocurrency has been something that so many people have stepped away from saying. They've wanted to call them a million different things, right? Even blockchain got turned into DLT, distributed ledger technology. Cryptocurrencies got turned into just kind of digital assets. And so I think it's great that they're going out with the full force attack.
Do you think there's any flip risk with Libra being seen as the acceptable face of cryptocurrency and harder regulations coming down on Bitcoin?
Good question. I hadn't really thought about that side of it.
Yeah, me either. I mean, I guess at first blush, though, because the public perception is right that Facebook is this evil company that mines all of your data. It's arguable. I won't say that it's not that. It also provides a great free service to billions of people in the world and connects them in a wonderful way and provides a great utility to many people. But so having that company or any of these companies really at the center of it makes them a target. Whereas in this case, it's very hard to say that Satoshi Nakamoto is taking advantage of all of us, right? Like there's just no target to direct the hate at and to hold up as this is why it's terrible.
And I don't know how you could regulate Bitcoin more. I mean, even the FATFA stuff that's come out recently is really just trying to push KYC and AML to, outside of the U.S. and having kind of a global agreement on a lot of this. That's about as close as you can get, and you're really just you're trying to have some KYC at that point of, the on-ramps and the off-ramps. Outside that, you can't really control it.
No, well, this was the conversation I had with Brian the other day because I can't remember her name, Maxine.
Waters.
Yeah, Waters. So she wants to do a Senate testimony. She wants to call Facebook in to talk about this. I said the funny thing is you can't do that for Bitcoin, and I think that really again highlights a benefit for Bitcoin. The other thing I'm quite excited about is the Libra Bitcoin chart. Because over a long enough time frame,
Right.
you're going to expose a bunch of people holding one cryptocurrency if they should be holding hopefully another cryptocurrency because Bitcoin should continually over the right time frames increase against Libra. So that's another thing I'm excited
That
about.
chart will raise some eyebrows.
Yeah, that will do. But that was my only thing that was a shame that it wasn't fully dollar pegged because you won't be able to then take the history back and just educate people. But I'm with you. Let's bring more people in. Let's show more people about.
Well,
Bitcoin.
and we ran into this problem when we were first trying to kind of evangelize crypto years back too. Is the problem is when you're in the the U.S., we have PayPal, Venmo, 5 credit cards, a debit card. We have great financial infrastructure. So adding some of these kind of Libra features doesn't really do much for us. But you go to the rest of the world, they don't have a billion people that don't have bank accounts that do have a Facebook account, and can't buy, sell, trade, lend, all these things. There's huge amounts of need globally. It's more in the developing world, not the developed world.
So I was discussing it. I had Caitlin Long on the other day to discuss it, and she said it's aggressively being marketed to the developed world.
Should be. That's where the most utility will be.
And she said it will probably bring more financial discipline to the central banks within these countries because they've gone away in the past of being so ill-disciplined. And that is a benefit. That is a good thing. So,
well, when the local warlord in some developing nation decides to, wipe out their currency and, basically get rid of the middle class to keep themselves in the 0.0001%, that you can do that once more. Because forevermore, you do that once, people are going to go to Bitcoin from now on. So you didn't have that option. There was no competitive option to go and have some other store of value other than your local currency in most of these countries. And, that was a means of never having a middle class. You just constantly inflate them down to nothing, and the warlords sit on top of everything. So that'll change now since people have choice.
you're not tempted to get a blockchain capital node,
Oh, we run a full node downstairs.
a Libra node.
Ah,
TBD.
yes, TBD.
Oh, right. So you've thought about it.
We have. We just need to understand all the financial details associated to it and expected returns and more of the details. But it's interesting.
But we do run a Bitcoin full node.
Yeah. No, I expected that.
Yeah.
I'm in my head though. I'm wondering, is a £10 million node? Is it still just like a tiny little box?
No idea.
I want a big box.
Yeah.
It was 10 million. I wanted the size of like this
Well, and
room.
it wants a full-time employee attached to it. And,
Yeah.
a couple of $100,000 costs per year. And
Yeah.
We'll see what it really means to run one.
Next up, I talked to Brad and Spencer more about how they consider investing in Bitcoin. But before that, I've got a message from my amazing sponsors. So first up, we're going to talk about accounting. Have you got your tax affairs in order? Have you got a tax tool? Are you thinking about it? Come on, you got to do this. Have you checked out accounting? They are without doubt the best crypto tax tool on the market. And they've also got this amazing portfolio tracking solution. Not only that, they are the best price crypto tax calculator in the market, and you only pay at the point where you download your report. They've just updated the website and the tool. They've already improved on their amazing UX. I love UX. UX is important for me, and these guys absolutely crush it. You can import all your data from major exchanges and wallet providers, and you only pay when you download the report. You've got to check them out. Head over to accointing.com, which is ACCOINTING.com. That is accointing.com, which is ACCOINTING.com. And last but never least, it's Dropbit. Have you checked them out yet? I've been going on about these guys on Twitter. I use it all the time. I use it probably at least 10 times a month, maybe more. I'm sending people Bitcoin. I'm receiving Bitcoin with it. Well, I'll be honest, I'm mainly sending it out. I do get a little bit though. But yeah, I'm mainly sending it out. I'm using it to give people Bitcoin when I want to do a donation to them, or sometimes when I got to pay someone, it's a small amount. Maybe we've been out to the bar and we've had a drink and I owe them some money. It is definitely like a Venmo for Bitcoin. It is the easiest way to send and receive Bitcoin on a mobile wallet. They've crushed the UX. They've got so many different options for paying. You can use an address, you can use a phone number, you can even tweet to people. So you've got to check out Dropbit. It is the best mobile Bitcoin wallet available. You can get it on the iPhone and Android. Just head over to dropbit.app, which is dropbit.app. That is dropbit.app, which is dropbit.app. All right, so let's move into Lightning. How do you feel about Lightning at the moment? Good and bad? The development of the infrastructure, the adoption?
Yeah, I mean, look, I love to see the development. I'm very encouraged by a lot of the progress to date. Do I think Bitcoin needs Lightning? No. If Lightning's going to be a big thing, is it going to be in 2019 or even 2020? Probably not. In terms of like some majority of the transaction volume really, going over Lightning Network instead of over the base layer. But yeah, I mean, I see it as one of hopefully what will become like many important projects that are built on top of Bitcoin at some point. And again, does Bitcoin need any of those? No. But do they add some additional value? I think quite likely.
It's a bit of a change in the narrative around Lightning I found over the last really kind of 6 months. I think people are starting to realize how good the base chain itself is, and how happy people are with that. Back to your point as well, Brad, about payment rails. So I personally am excited by Lightning, but haven't actually found a use case for it. I haven't found a reason to use it yet.
Pollo feed.
Sorry?
Feed chickens in Indonesia.
Well, yeah, or I could sell special episodes of the podcast, but no, I haven't found it yet.
I mean, we tinker with the Lightning a lot. We have a hackathon, a Lightning hackathon going on downstairs in a few hours. We've met with every single Lightning company we possibly can. We tinker with all the different projects out there. And when you do start playing with it and kind of getting your hands dirty, you realize it's really early. The interfaces are weak. There's odd problems over and over. So we're still in, it feels almost like pre-alpha type stage. But I think, well, I don't say I know, but highly likely that these problems and kinks will get figured out. We have some of the smartest people we know working on it. All the companies in this space seem to be well-funded, and there's exciting developments. But it's going to take longer. I think too much in this industry, and we saw this during the ICO craze, people jump to the ideas and go, look, we solved the problem with this idea. And they really forget there's a company that usually needs to be built around it. There's hiring, there's culture, there's infrastructure, there's iterations of the product. And from the great idea, sometimes it takes a few years to really get a working product out there. Instead of these ICOs that were basically, putting out a white paper, and people were expecting this product to be done and live 6 months later, which is just a totally unreasonable time frame for any company to really do something of quality. So I think Lightning's going to be very important, but I think there needs to be prudence on the timeline to really get there to be in a functional state.
Do you ever think or consider that it might be quite hard for companies building on Lightning to be able to create a company that can make a good margin on what they're doing? Because one of the things I've looked at is it seems to be very slim margins. Bitcoin itself feels like a market that's hard to make money in. Great if you're an exchange. Millions of transactions you can take a small amount of. But, wallet providers, they don't make a lot of money. And I spoke to wallet providers who've struggled with the revenue model. And I look at Lightning, I look at something like Lightning Labs. Amazing company, amazing people. Elizabeth is amazing. Great products. What they're doing is incredible. But I also think, where is the revenue? It must be a huge challenge.
It's great for the ecosystem. It's, as an investment, they need to figure out what they're going to be as a revenue-generating business eventually. But the work they're doing is really important. Radar as well, doing tremendous work as well.
Yeah, and I think it's challenging on two fronts. One is we don't know what business models will translate well into this new type of a network. So you have kind of just overall business model risk. And then two, by design, a great feature of something like Bitcoin or Lightning Network is that it's free to compete. So anybody can come and enter and try and drive down your margins. So how quickly will that actually play out in reality? It might not be as fast as what people expect. If we rewind just 3.5 years ago, a popular thesis going around crypto circles was that exchanges will be a terrible investment because they're all going to compete away their margins down to zero. And obviously that has not been the case. I do think that will probably occur over a longer period of time, but certainly there are fantastic businesses to run over the past few years, and I think will continue to be so for a while. So we could see something like that in Lightning Network, where someone's designing a little bit of a new business model. Maybe it's liquidity hubs, it's routing, it's watchtowers, it's something along those lines maybe. And maybe at first people assume that, there will be no margin to be had whatsoever, but really because of either trust or brand or something like that, that you're able to sustain margins for longer than expected.
And I'll twist this to more of your kind of earlier questions on trying to get at the venture capitalist mindset here. It was about a year ago, we started saying, Lightning's going to be really interesting. I don't know why, but I just have this gut feeling this is a really important development. So, the great thing about our position is once you sort of open your door to accepting a technology, you meet with every single startup that ever is doing anything associated to it. And each one, you learn a little something. You kind of fill out the picture. It's like puzzle pieces coming in. Certain people have a lot of the pieces. Certain people have one. Certain ones need to be changed. So it's slowly coming together, but we're getting to have kind of a front row seat again to hundreds and hundreds of really smart people out there that are doing creative, fun things with Lightning, on top of Lightning, tweaking it, who knows what. And every once in a while, a company comes in, and it's just like that aha moment of like, we found the killer something that's going to take Lightning from here to 100x. But you don't know what that is. And that's not really our job to figure that out. Our job is to, meet with very, very creative, talented entrepreneurs and hopefully identify when someone has figured that out and fund them and give them all of our support and help we can.
So you do have those moments as an investor where something comes in, and do you have to kind of hold your cool in the room, not to give too much away, and they leave and you're like, wow, that was the shit?
In the past, my brother and I have taken out a checkbook mid-meeting before and written someone a check to make sure they took our money.
So what blows you away? What are the things that tend to blow you away? Is it
team over technology?
Okay.
There's certain entrepreneurs that I'm just sitting here with like a shit-eating grin and am so excited, and I'm giving Bart and Spencer little looks of like, we have to switch from being, really inquisitive and asking tough questions into basically selling ourselves. How are we valuable? What can we do for you? What are relationships, the doors that we can open to help them out? And it shifts when you feel it very distinctly when you're in the presence of founders that just have what it takes to build something amazing. And it feels like a kind of a cult of personality or some type of energy, and you just feel like this person is a winner, and I want to back them whatever they do, even if it doesn't happen to be the route they're trying to do. They'll be able to pivot well in time, preserve cash correctly, communicate effectively. And most importantly, if I'm getting that kind of butterflies in my stomach and excitement, when they go out to raise future rounds, that skill will come through over and over and over again. So they'll be able to raise money well when they have that sort of charisma and excitement and vision.
And when they go talk to customers too.
Yeah.
Right, so you go talk to customers. If we have that feeling, then so do their potential clients. And then also if they bring in like a product of any kind too that we can play with, that also goes a long way. I mean, we're all kids at heart, right? And someone shows you something that's just amazing and takes the user experience to the next level, or does something I could have never done before, puts a smile on my face every time.
And is it always a team, or can it be an individual?
It can be an individual.
It can be an individual. And what is it about them? Like, is it energy? Or is it the way they talk to you? Is it the way they present?
It's hard to put it in a box. It's really a gut feeling, and it's extremely apparent. That doesn't mean every single one of our management teams we've invested in has that. Sometimes you're really seeing someone that's got a product that's getting traction, and maybe the management team's weak, but they've nailed it on their product, and maybe they're just great technologists and not great marketers. And then it's up to us to hopefully say, hey, want to go from being CEO to CTO maybe, and we'll help you find someone that's more of a salesy CEO to be that kind of front person. So each case is different.
So is it kind of like dating? You know what it's like. Well, I don't know if it's like, but I'm
saying when we invest into a company, and theoretically, if they're successful, we'll be with them for 6, 8, 10 years. So it is a long relationship, and you want to be able to have an ongoing rapport with someone. And we've had to hold our noses and maybe invest in an asshole or two, but ideally not. And you really want to be able to say, hey, we're going to go through good times and bad times together, and I'm going to have to be a bad cop, and I'm also going to be your best friend. But it's going to be a long relationship, and you want to be able to be, to like them and want to roll up your sleeves and spend a lot of time with them.
And is the unicorn thing, is it something that you're looking for in every product, or is it, no, you're fine if it's something maybe a 50 million or 100 million exit, or is it you're looking at every product like it needs to be huge?
It's not the outcome necessarily, it's the difference between where you think it can go versus where it is now, right? So in terms of valuation, like it doesn't need, a lot of times we're doing seed stage investments that are, valued well below $10 million. And so, we typically are looking for something that can have at least, we think, a reasonable chance at kind of a 10x outcome, especially for an early stage investment, considering that most of them just won't be able to make it. Just inherently very early stage startups are really risky. But again, if you're looking at something that's sub 10 million early stage, then you're looking at a 10x of could this be a $200 million company, right?
Okay, interesting. And what are the unique differences about investing in crypto/Bitcoin compared to other markets? And I'm going to throw in one that I feel that stands out to me is that you deal with market cycles because Bitcoin is almost still its own ecosystem. There's not very many products or companies who have managed to bridge between crypto and traditional, the rest of the world. One that stands out, one of my sponsors, BlockFi, they seem to have done that. They seem to have bridged traditional finance and crypto. But so it seems to me that there's a lot of risk because most of them, their only customers are people already in crypto. That seems to be one unique thing. I might be wrong. Correct me if I'm wrong. What other unique things do you deal with in investing in crypto?
It's a good question, but we definitely think, you see people come in too loaded on one side of the table or the other. Either they're so deep in traditional financial markets and haven't had enough time to understand how something like Bitcoin works that they want to just turn it into what they already know. Or you get the other side of the market that you get someone who only knows Bitcoin and has never understood how a traditional financial market works. And that's fine. I mean, a lot of this is creating some sort of a new financial system or at least a new asset, but it is relevant experience to help understand how traditional markets work today. While there's some inefficiencies in them, they have evolved and gotten better over time over the past 100 years. And so having some of that context is generally helpful.
So if somebody's looking to raise a round and they're considering approaching a company like yourself, you talked about the meeting, when you meet them, you see the magic, but what other things should they be doing? Should they be trying to bootstrap first, or should they try and have a demo product? How do they reach out to you? What are the things you want to see from people?
We keep our emails on our website, and we'll look at every single deal that comes through. Our research team's up to 9 now, so we have essentially enough horsepower to make sure we're touching and seeing everyone. So the very first thing is for us is just basic skim of, call it there's 20 categories of companies that could be in, and there's 10 of those that we are just not interested in, that you can just reply back very kindly, I'm sorry, this is a pass, just because it's nowhere near what we want to look at. So it's more of, I think we have interested buckets that we are kind of looking for companies in, and then we're just open for brand new concepts and companies, and then there's certain areas that are just not interesting at all. So I think that first pass becomes really easy. And then it's more meet the team and kind of take the next steps in there and kind of dive into potential business models and what's the market need and how big's the market and kind of the next logical VC questions.
And then there's also, there's lots of businesses that we come across that, again, we think they can be great, reasonable businesses, but they might not be venture return type businesses, right? So that happens a lot. And I think sometimes when I talk to these entrepreneurs afterwards and kind of let them know of I don't think it's a good fit for the portfolio right now, they get a little bit disheartened about that. And I think usually when you talk to them more of listen, I genuinely think that you can build this into a good business. It's just not going to be one that I can see going to IPO, getting acquired. It's something that you can run though and generate the cash flows directly to yourself. And we actually see quite a few
my
of
business.
those.
Yeah, that's what we're discussing.
Yeah.
We're a good number that we see come through.
Yeah. We don't want a media company. Okay, so what are the buckets you are interested in?
Lightning, obviously, NFTs. So and view that more in kind of the video game space and MMOs and having assets in the real world that you can trade. OpenSea is one of our portfolio companies. It's an exchange between a bunch of different NFTs out there.
That's in one of the Coinbase ones as well, right?
Yeah.
Yeah, I think I saw that on their website. Yeah.
Other areas, I spend an inordinate amount of time in security tokens. Also, much in the Lightning vein, it's early days. We still are dealing with regulators nonstop, but I think eventually that's going to be a massive industry. So we're not really investing in STO projects per se, but the infrastructure needed, whether it's the exchanges or Securitize that does compliance, we still need the basic infrastructure like we needed in Bitcoin 5 years ago for security tokens. And they're coming along slowly because they have to go through regulatory steps in a much more painful, slow way. So we really like that space, but I definitely think it's really early.
We've spent a lot of time also just looking at the, quote unquote DeFi space, which to me I think includes Bitcoin. I think Bitcoin is the original DeFi, but it also obviously also branches well into the Ethereum ecosystem as well. And I think there's a lot of really interesting experimentation going on there. We haven't gotten comfortable enough to make an investment in any of those things, but we think they're all, we always refer to them as directionally correct, and that they are doing something interesting that could be useful in the future, and just don't think the model's either quite there yet, or there's some critical flaw associated with it, or it doesn't quite provide the utility that it's promised. But again, we think you watch a lot of that playful tinkering and just kind of see what happens with it.
Yeah, I think I read you find MakerDAO interesting, right?
Yeah.
It's hard to ignore it.
Yeah.
We talk about it all the time. It's a really important, interesting part of our ecosystem. We just have not made an investment there.
Yeah. What should entrepreneurs look for in investors?
People that want to work with you and not against you. Very much the whole point of doing especially equity investments is that you're in the same boat together, right? Mm-hmm. Like neither of you guys wins without the other one winning. And so it should feel like that in a relationship. It shouldn't feel like a zero-sum game between the two of you. Granted, there is some transactional relationship, especially at the start of that, where it's an investor trying to acquire some piece of your company. You're trying to maximize for the price. They're trying to minimize price. But at the end of the day, if you guys both see eye to eye, it shouldn't be that hard to find a middle ground. And if you're finding it really difficult to find that middle ground, then it might just not be a good fit.
I would add, too, some commitment to the ecosystem. In the past 6 years, we've seen, a dozen major generalist VCs come in, get very excited, show how amazing their track record is, make one or two investments in the space. Maybe the price of Bitcoin goes down, and they kind of walk away. And they aren't interested anymore. And they're not there for follow-on rounds of financing. They're not staying abreast of the industry to be able to give any type of intelligent advice. And that's tough if you have an entrepreneur. That's all, all of a sudden you have someone that's super excited about giving money and then isn't there to care one bit 2 years from now. So I would, we're obviously talking our own book here because we're a specialist firm that's dedicated to the ecosystem. But there are some generalist VCs out there that are more long-term dedicated and have been around a little more, but not many though. So I think it would be nice to see more generalist firms make more of a long-term commitment to the practice. There's only maybe, Union Square and Andreessen Horowitz are probably two of the only ones that have really endured and stayed constantly focused on this is going to be a big market.
Have you ventured out of the space?
Accidentally.
We invested that were going to be blockchain companies and then didn't become blockchain companies.
Not to add a blockchain or crypto component to it. And they're doing well, but
we're supportive of that. There's no reason, again, why you need to have a blockchain for everything. And so if sometimes they're doing it and all of a sudden the product's taking off and they had a roadmap where they were going to in some way integrate crypto or blockchain, and then it turned out that their business is doing well without it, that's great.
It's more the inverse, though. We have probably a dozen companies a week that we'll get business plans from that have no need whatsoever for a blockchain or crypto. I think I'll end up singing Jimmy Song's tune here that, I think people saw this as a way to kind of paint yourself in crypto and hopefully you'll be more attractive and get investors, even though it has no benefit to their business whatsoever. If anything, they add a friction token and make their entire ability to, actually have their service get adopted harder through putting in a token.
Brad, what's a friction token?
A friction token is an absolutely unnecessary token that makes customer acquisition and people to use your product even more difficult by forcing them to go purchase this token and then use this token when there was no need whatsoever for the token in the first place. So you just added friction to your entire sales cycle or customer cycle.
Is that not all tokens?
The majority.
Yeah.
Yeah.
It was one of the reasons I kind of was disappointed the bear market didn't just carry on a bit longer and go a bit deeper, just to wipe some more stuff out, because I feel like Bitcoin has saved a few projects.
Well, that's the thing, but these are the walking dead. So something goes down 90%, is that still alive? Something goes 99.9%, is it still alive? These chains become zombie chains. And then all of a sudden someone breathes life into them because they think there's a micro alt rally, but they never die. Usually startups, you could say, 70 or 80% of your startups eventually, they file for bankruptcy and it's a zero. Some of these changes, they just slow to trade and but they still just exist like the Walking Dead.
So is that 2-in-10 ratio pretty much the same in the Bitcoin space?
Hasn't been in crypto. They talk about a J curve in venture capital, which is you make a handful of investments and then your losers die first. So the net asset value of your fund dips below the size of your fund, and hopefully the successful ones start getting marked up. So your kind of valuations of your fund dips low and then shoots up. We have had no J's. If anything, some of our more troubled companies get acqui-hired, for $1 million per engineer, solely because there's a demand for people that have spent a few years tinkering with blockchains and understand the technology. And then a lot of these companies still are able just to get funding because there's people really excited about the space. I think we've had a nice, wind at our back in financing that we haven't, even in the full bear market of 2018, there's still companies getting funded a lot because there's a lot of people there's passionately believing this is a major, major sector and a major technology, and this isn't going away.
So you still got the same conviction, more conviction?
Oh, more.
More.
I mean, we used to, be scared silly that all of a sudden, Silicon Valley Bank would shut off the Coinbase bank account, and it would set the whole industry back like 3 or 4 years. Because no one could get banking back then, so you needed some of those on-ramps. At this point, we are so past critical mass reached, and there's no chance in my mind at all that crypto just goes away. Mm-hmm. But that was a legitimate concern for a handful of years in there. There are lots of points out there where the winds could change, and this industry was just going to get crushed, before it ever got out of the crib.
And how far do you think this can go? And let's just keep to Bitcoin for now. Do you see Bitcoin becoming a major asset similar to, say, gold? Or do you see the full vision that some people have that this becomes, actually changes the financial system of the entire world?
Global reserve currency of the world?
You see that?
For sure.
For sure.
It's inevitable.
Okay.
It's just how long is the question there.
And I mean, even again, right now, so what is Bitcoin most useful for right now? Well covered that it's a store of value asset. I mean, you look at the store of value, it's not even just gold that we need to be looking at, which is a $9 trillion market alone. You need to look at the art and collectibles market, which is a $4 to $5 trillion market. So I'm talking about high-end paintings from the likes of Picasso and Van Gogh, 1963 Ferrari GTOs, right? These are assets that, on the surface, people assume they buy them because they're beautiful. That's not the case. They buy them because they're scarce. They buy them because they're a store of value. After purchasing those assets, most of the time they sit in a vault or they sit in a museum. And the purchasers have very limited, if any, capacity to even consume the beauty of these pieces. Same with the cars. They sit in warehouses and in showrooms. They're not driven around, right? So those are all store of value assets. And also in many ways, the real estate market is a store of value asset as well. I mean, the micro example that we like to use is up in Vancouver, just a few hours north of here. The property market over the past decade has been significantly driven by overseas purchasers. And these aren't overseas purchasers that are buying them to go live in the homes. They're not doing it for rental income. They're not renting the homes. They're literally homes that just sit there empty as a store of value. And I mean, the problem got so bad in Vancouver, they had to institute an empty house tax, right, to kind of address this issue, just because of how pervasive it was and the fact that it was driving up the cost of living. So, I mean, even, I think that the global real estate market's measured in the hundreds of trillions, but even if we assume that only, 5% of it or so is used as explicitly a store of value, and granted, even if I'm living in my house, it's also a store of value, so these things are not mutually exclusive, but if we just accounted for empty real estate, we're probably talking about another 5 trillion right there. So we've got kind of 9 trillion in gold, we've got 4 to 5 trillion in art and collectibles, and then we've got another, 5 trillion or so in real estate. So together we're talking about a market that's, north of $15 trillion at a low-end estimate and really likely in the hundreds.
But can Bitcoin swallow up a large majority of that? And what I mean, obviously, it's not going to change artwork and cars. Mm-hmm. But do you see the value of gold? Could that potentially be destroyed by Bitcoin becoming the global reserve asset? Or do you think they have a kind of symbiotic relationship?
I think it's more of a demographic thing.
Okay.
My father loves gold. I think it's like a rite of passage of being like an old wealthy human, that you accumulate a bunch of this gold into your later years, as preserving your wealth, that you have it. The younger generation doesn't have that same affinity for gold, so I think gold bugs of the world are slowly going to fade away with time and age, and that is just a demographic group that will be replaced by the younger generation that essentially wants that same store of value, but doesn't see any real inherent value in gold.
Does your dad have Bitcoin?
He did, and then he sold it to us about 3 years ago, I think, very unhappily. He wanted to sell it, and I just refused, so we bought it from him.
Does he get it?
He does. He does.
He does.
Kind of implicitly.
So he's not like Peter Schiff.
No. He loves seeing what we're doing. He understands the thesis. He's just much more of like a physical, real world assets guy.
I think you're right though about it being a generational thing. Again, when I was, Christopher Giancarlo, his Senate testimony here, and talked about, I think it was his nieces and nephews. They don't care about even the stock market, but they get crypto. Like they just get it. I don't know if you saw my tweet yesterday as well. My son did a paper. He did a speech at school about Bitcoin. Did you see it?
I did.
So I gave him.
Really good, yeah.
So I gave him the pointers. I said, these are the things you need to research. And he went away and did it. But then he came back asking questions, and because his teacher had asked him questions about it, and he was like, he said the great thing about it. This is where I was so proud of him. He said the great thing about it to his teacher is that there can only ever be. He got the number wrong. He said there can only be 20 million. But they can't print any more. So if more people want it, it's going to go up in value. And I was like, I'm so proud of you.
Humans are innately drawn to scarcity, and that's it. And even as kids, like right away you click to things where you're like, wait, there's only how many of these out there? And right away you try and grab one, right? So it's like, it's part of human nature.
I don't know though. I've been starting to post some things back up on Facebook recently, just for my friends. I think they think I'm annoying, and probably just want me to piss off. But I've been just putting out these messages that Bitcoin isn't magic internet money. It is scarce. Trying to give them the kind of the sales pitch. I'm not getting anything.
Just start with magic internet money. I just go there.
Okay.
I just start with that, and then people are like, wait, but seriously, no, tell me more about it. And then once they start asking questions, then you can give them the real stuff.
So, just to finish off, two things. What are the things that you think are going to be most important for the ecosystem over the next year, 2-3 years? What are the things you want to see happening? Is it regulatory? Is it ETFs?
Yeah, clarity and regulation pops to my mind just first. The whole, I'll call it the U.S. side of the industry, is basically on hold. Like, people don't know what they can do or can't do. And, can we have token sales? Can you, have DEXs? Can you, there's so many unanswered questions right now that innovation is going to occur outside our borders for the time being, or just kind of sit on the sidelines. So, and capital formation hates uncertainty.
Okay.
There's some things I can think of that would be major catalysts, but honestly, I think that you could take away all of those things, and I think Bitcoin just keeps going, and that's what's great about it. Yeah. I really don't think it needs to change. I don't think it needs anything right now, except for as far as, again, hidden escape velocity and the number of people that are working on it. That you just need things. It's just time. Like, really, time is a huge factor. I mean, when you're looking at Bitcoin, it's 3 years old. You're relatively right to be dismissive of it, right? At 10 years, you have to start taking it a lot more serious. By the time, think about it now, 10 years into its history, if you're 18 years old, it's been around for more than half of your life. So someone that's over 60, right, it's been around for a small percentage of their life. They're right to be somewhat skeptical of it because in their span of their existence, this is still something that's relatively new. If you're 18 years old and Bitcoin's been around for 10 years, you're thinking, sure, some people tell me that maybe I shouldn't trust this thing, but if it's something that's been around for more than half my life, I think I feel pretty comfortable with it.
And in the other direction, if you're 60, it's going to have less of an influence on the rest of your life. Whereas if you're 18, this could be a major influence on the rest of your life. So you gotta look at it both ways. All right, cool. And also, look, if people are interested in talking to Blockchain Capital, they've got maybe an idea, how do they get in touch? How do they contact you? Who do you want to hear from?
You can email me at spencer@blockchaincapital.com, or you can find me on Twitter. My handle is creme de la crypto.
Brad at blockchaincapital.com.
Brilliant. Okay, thanks for coming on, guys.
Thanks so much.
My pleasure.
All right, so what did you think of that? Did you enjoy that? Did you enjoy hearing from Spencer and Brad? For me, it was really cool to just sit down with a couple of very experienced VCs and get their take on the space. And especially Brad's view on Libra. That was really interesting for me because Libra is something I'm definitely interested in where my view has swayed a couple of times. But hearing him talk about that was super cool. It was also great to hear about what they're looking for in an investment, but also what entrepreneurs should look for them for as an investor. They definitely made me feel a lot more bullish about the space as well. I like their take on Lightning. I love their take on Bitcoin, of course. So yeah, just keep stacking those sats. And if you've got any questions, you can reach out to me. And also a massive thanks to everyone who supports the show. It doesn't matter what you do. Even if you leave me a review on iTunes or you click on the subscribe button, everything you do helps with the show. If you want to find out more, you can head over to my website, www.whatbitcoindid.com. Click on the support section. That'll explain everything. You can subscribe. You can buy merch. You can become a patron. There's loads of stuff up there. If you want to support the show, head over to there and find out more. And yeah, I fly back home tomorrow. It's been another long and great trip. Again, thanks to everyone who's helped me while I've been out here, whatever it is. Also, a big shout out to David Bailey and the Bitcoin Magazine team for the amazing event they put on in San Francisco. But I need to get home. I'm missing my kids. I want to get back. So yeah, massive thanks to everyone. Hope you enjoyed the show, and I'll speak to you soon.